Yeah, it's not as sexy as like gold, copper, or uranium or something, but Jesus Christ, it'll become sexy when food costs a shitload more. and
Well, I mean, and I can tell you right now, from what we're seeing and hearing and reading, it isn't going to get any better in the near future. I mean, you've got OCP and Mosaic are down for maintenance at the moment, which is primarily driven from the fact they don't want to pay for sulfur; it's too expensive. So I think there's still some concerns out there what the next 6 to 12 months hold, and ultimately that comes back to cost of living and inflation and food pricing.
This is general advice and my opinions only. This episode's company has paid me for this interview. I may be long, short, or hold an interest in stocks or CFDs mentioned. Past performance isn't reliable. The interviewee's views are their own, not necessarily mine. LEVRD operates as a corporate authorised representative 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website link in the show notes.
Right, hey, bag holders and stop loss aids. I'll tell you what, this war has given people the opportunity to become popular again. Dan Gleeson from Canadian Phosphate. Mate, you've probably been peddling the wheels about phosphate for years, but now the world's interested in it, it appears.
Yeah, look, it certainly has helped a little bit with what's been going on geopolitically, and certainly it's a little bit easier these days to explain what phosphate is and what's the purpose of it, because historically it has not been the easiest story to tell. So money and misery, as they say, unfortunately, is the case.
Oh, it might be ending soon, but anyway, you've got a bit of a kickstart anyway. All good, righto. CP8 we're talking about. Here's the chart up here. As you can see, punters, she's had a bit of a rise coincided with the war. It's 48 mil market cap, mate. Phosphate now, we're going to explain a bit. People talk fertiliser, but phosphate's only one component of it, I guess. So on the back of what's happened in the last few months, why has phosphate been one of the things to get a bit more attention?
Well, look, I mean, a lot of people are pointing to Iran as the reason, but honestly, the fundamentals of it started with China, who produce 40% of the world's phosphoric acid that goes into making fertilizer. So that really started driving prices higher and higher. And then we ended up with Iran on the back of that, which really was the straw that broke the camel's back, I'd say. And that's primarily, or not primarily, it's entirely driven around the fact that rock phosphate requires sulfuric acid to process it into something meaningful, be it fertilizer, LFP batteries, or beverages and food. So it's actually been the shortage in sulfur and the huge increase in cost of sulfur prices that's driven phosphate even further.
Yeah, right. So, and is this a bit of a similar sort of to nickel in a way? I just look at here, like agriculture sort of making up 90% of rock phosphate use, but there's that growing industry of the LFP batteries, the lithium ion phosphate. Are they at the moment a bit of a small component? It's agricultural dominant?
Yeah, absolutely. And I'll say it's a smallish component, but it's entirely situated in China today. The LFP manufacturing, it's 98% or approximately that is where it's all manufactured in China. So it's still probably only 5-6% of the entire global market. It's certainly the fastest growing sector, but as we said, 90% of all phosphates processed into fertilizer. So it's still really a fertilizer discussion. And eventually it will become an LFP. It's just a question of, is it an LFP discussion globally, or is it an LFP discussion just for China? Because no one's really uncovered that box yet.
Yeah, so that's the processing of it. And God, I wouldn't pay weight to too many things I say when I say, oh, geez, I didn't know this till today, because I'm not the best measure of intelligence. But the actual where the phosphate is mined, 70% from Morocco and the Western Sahara. Why is that the richest place for phosphate in the world for global reserves?
Well, look, firstly, I'm not a geologist, but I will tell you that it's one of those things that it's always been known. The drilling and the work has been done. It's a sedimentary deposit. So there's obviously something about the history of the geology formation over there. But today, that's where 70% of the world's sedimentary phosphate is known to occur. Yes, there's obviously other phosphate that hasn't been discovered yet, but to date, there's really been no significant deposits outside of igneous, and I won't go down that path because it's really only 10% of the world's phosphate is igneous, but it's a very low concentration igneous. So that is, as we call it, a single choke point, being Morocco and Western Sahara for the world's known reserves of rock phosphate.
So how much that OCP, like the state-owned Moroccan entity that owns this, so they've got a lot of power and control for, well, you'd say global food security, because this, the fertilisers, it's for the stuff we jam in our throat. So how influential are they?
Well, they're extremely influential today, but it's only going to get greater because China has continued to restrict exports year after year to a point where they're barely exporting anything. So the world is somewhat looking to Morocco to bridge this gap. Now, despite the billions they're investing into new infrastructure, their ability to bridge that gap is still going to be challenged. So I think there's going to be a continued pressure on phosphate pricing. And there's really going to be an even greater reliance on OCP moving forward, or Morocco as a whole, for the source of fertilisers, which you'd have to imagine makes other governments anxious.
Yeah. Okay, before we get into your projects, because you've got two in Canada, you've got recently under a binding agreement to get a third in Utah in US. But the NPK terminology so Canada is 100% import dependent for phosphate, but there's phosphate's only one component that makes up these fertilizers. You've got phosphate, you've got nitrogen, and you've got potash. Can you go through that whole thing for me? All this, I've known this stuff for years, but
well, look, I mean, the easiest way to describe it is you have your macro elements, and your macro are your nitrogen, your phosphorus, and your potassium in the form of potash. So if you look at what a farmer's spreading from a fertilizer perspective on an annual basis, in terms of weight and volume, it's 95% NPK or 90% NPK. So those three elements are the most critical for, let's say, yield at the end of the day, which is profitability. There's many other micro elements, but they're much smaller in terms of volume. And really what they're looking for from a cost of production and input cost, it's a cost-effective source of nitrogen, phosphorus, and potassium. And as you mentioned, Canada can make more than enough to be self-sufficient on both of those. But what they are really requiring is phosphorus, where they import 100% of their needs. And that's predominantly from the US and the remainder from Morocco, bits and pieces from Saudi Arabia. So clearly the tariff discussions from the US has made them anxious. But then you add to that just the global constraints on phosphate and the pricing overall. I'm sure the Canadian government is really looking to secure a domestic source of phosphate for food security, which is what it is at the end of the day.
So US is pretty. So they've got phosphorus production, and does that satisfy their own needs, or are they still importing a bit as well?
No, so they produce enough of their own phosphate fertilizer. What I will say, not to confuse, the biggest producer there is Mosaic, and they're importing rock phosphate from Peru, which they then process into phosphate fertilizer. So that does make the US a net importer of rock phosphate, but they are making enough phosphate fertilizer in the form of MAP and DAP to be self-sufficient. But again, it's a question of, where is the source of rock phosphate coming from? And Mosaic represents 60% of the US market, Nutrien 30% of the US market, and the remainder is Simplot and Idaphos. So there is some concerns around long-term supply of rock phosphate in the US.
Yeah, okay. Glad that you've had plenty of time to get all over this stuff, mate, while you've been peddling the wheels for the company after all these years. And this is your time to shine with all this knowledge.
Correct. It's been a lot of work. It's a lot of work, but I think fundamentally we've really started to establish a clear strategy. And at the end of the day, it's establishing a path to the market where there's demand for it and people want to buy it.
Yeah.
And that's what we're looking to do.
Yeah, Ben, before I'll get into your projects next, but do these sort of projects get labelled similar from a lack of understanding from people, like with everything that's going on at Jansen, the potash thing and like the cost blowouts and the delays, and does all this, any sort of fertiliser ingredient like your phosphate, you're not potash, but does it all sort of get bundled together a bit from some of the investors? They're like, oh geez, they associate it with Jansen and things like that. Have you found that?
Well, the amount of people that think potassium is phosphorus and vice versa is more than I care to mention. So you do get put into the bucket of agriculture, I think, first and foremost, which is very cyclical, which I think at times scares investors. I think the other part to it is it's a very capital intensive industry. Now, not to say you don't get investors into capital intensive industries, but you look at Morocco, Egypt, Tunisia, Russia, China, they're all state-owned phosphate companies.
Yeah.
Really, the true independents are the North American ones. So I think there has been a lack of investment into fertilizer in the past. But I think as people understand it more and see the reliance on it, agriculture and fertilizer tends to work its way through these huge dips in the market. People always need to eat. People always need to fertilize their fields. So it's a fairly safe bet from a long-term perspective. It's a question of patience.
Yeah, it's not as sexy as like gold, copper, or uranium or something, but Jesus Christ, it'll become sexy when food costs a shitload more. And
well, I mean, and I can tell you right now, from what we're seeing and hearing and reading, it isn't going to get any better in the near future. I mean, you've got OCP and Mosaic are down for maintenance at the moment, which is primarily driven from the fact they don't want to pay for sulfur. It's too expensive. So I think there's still some concerns out there what the next 6 to 12 months hold, and ultimately that comes back to cost of living and inflation and food pricing.
Yep. I've got your 3 projects up here, mate. So you got Wapiti, Fernie up in British Columbia, and then you've just gone into a binding agreement to acquire Diamond Mountain in Utah. I guess when you're at this stage, you've got 2 projects already. Why the third? What was it, a compelling opportunity next to a producing mine, or?
Yeah, it's something we'd had our eyes on for some time. It was always a question of our focus and also our funding. But when you look at Diamond Mountain, it's quite an advanced project. It's a 43-101, so it is a foreign resource, but at the end of the day, it's still a 50 million tonne resource. 28 million tonnes is measured and indicated, and then the remainder is inferred. It's also averaging 4.4 metre seam thickness, which really for a sedimentary deposit of phosphate puts you more into the category for a tier 1 phosphate mine, just for the simplicity of mining it. So we saw it clearly. It's very close in proximity to Simplot, which is a global producer, major producer, doing sort of 4 million tonnes a year of rock phosphate, 3 to 4, and producing very large volumes of phosphoric acids. So sitting on state-owned land, which is significantly easier to permit and access, very low holding costs, and a high-grade phosphoric acid phosphate content at 20%. So it was one of those things that we saw, we'd kept an eye on, we saw an opportunity. I think we were very strategic in a way in the timing of it. We sort of got to it and got to the terms before Iran and before the big focus on phosphate came. And they stuck to their word, and we went through the due diligence and have come out looking really optimistic at this project, and with the expectation to build upon this resource. There is more phosphate in the area, and we need to work through that over the coming months.
That 4.4 metres at just below 20%, is it phosphorus oxide, or how do you P2O5?
Phosphorus is how we refer to it.
Just phosphorus, yeah. So 19.67% phosphorus, 4.4 metre seam. What is there a comparison you can give to like some of the stuff in Morocco, or like what's sort of your flagship thicknesses and grades, like, or how does that rate effectively?
Yeah, look, from a concentration level, it rates very well at close to 20%. Seam thickness is also very, very positive from a phosphoric acid plant, tier 1 mining company. We'd still like to build on that resource. I mean, 50 million tonnes is a large resource, but to get it to 100 or 150 would be really, really exciting for us. But nevertheless, we know we can build out a very attractive DCF model from this, or our expectations are. So it really does position it from a phosphoric acid plant production. It can make mainstream phosphate fertiliser with a mine life of 20 plus years at least. But we still need to work through the economics of that. But it gives us the potential to build a tier one phosphoric acid plant and mine in the US.
Is that so? The seam thickness, is it set like not like a coal seam, like a flat laying thing? I've just got your picture of your resource or your
that's so what you brought up here is
Wapiti
Wapiti.
Yeah.
The Utah one is a flat one. So
Okay,
once
yeah.
you get down to it at depth, it's very easy to mine. This is probably the key differences between the US and what we have in Canada. Our Wapiti and Fernie mines tend to be more like a coal seam, sort of 1.5 meters in thickness. The beauty of Canada, though, it outcrops at surface. So we can start mining from surface straight down.
Yep.
At some stage, you have to go underground. But based on our approach for a single superphosphate plant, I mean, we've got decades before we'd have to consider going underground. So that is the big difference. We're more 1.5 meter thick seams in Canada versus 4.4 up to 5.6 in the US.
Yeah, yeah. Oh, that makes bloody sense. Although I assume mining's always works the same. Thicker the better.
Yeah,
especially if it's high grade.
Exactly.
Because you've got at Wapiti, you've put out a JORC compliant exploration target with so it's got lower to upper 20 to 28 million tonne at sort of 15.7 to 15.96% phosphorus. What information have you got historically that's, I guess, sort of led you to, put out an exploration target with a grade attached to it as well, not just a tonnage?
Yeah, well, historically we did have, we'd done a JORC compliant mineral resource estimate, which was 1.5 million tonnes. Not a very large volume, but historically the company was looking at organic and regenerative agriculture, and given the very small volumes that were being sold, 1.5 million tonnes was 150-year mine life. So that's where it came back with. We spent a lot of money drilling that out on a small area. So we have a good knowledge and understanding of this project on a section of Wapiti. So we do understand seam thickness, we understand the grade, we understand quite a bit about it. But clearly we need to build out a much larger resource if we're going to convert this into a synthetic fertiliser, because our ability to sell hundreds of thousands of tonnes becomes quite evident. And that's what the drill program in July, August is going to focus on is, right, how do we bring up a maiden mineral resource estimate, which I'm hoping that we're coming up with several million tonnes that measured in the indicated, and then the remainder in inferred. The measured and indicated will give us the opportunity to develop a pre-feasibility study. And if we're looking at 100,000 tonne annual production, it certainly gives us, decades mine life on that. But we also want to demonstrate to the market that there is a significantly large resource there. So it's really a two-pronged approach, the drill program. It's really to validate more than explore, is what we're telling investors, because we know it's there. Yeah. It's outcropped at surface. We've done drilling. There's been other companies historically that have done drilling, but clearly we need to tighten that up into a mineral resource estimate to JORC standards to really demonstrate that to the market.
Is that 56 holes that you've got planned for both stage 1 and 2, is that likely going to be enough to give you that maiden MRE?
Well, we really think it will be, just because it's very consistent geology. So we know where it runs along at surface on either side. We have a fairly good understanding of the slope and the angle, but that's what more of the drilling will determine. I mean, honestly, I'm hoping that we find some more folds and get some thickening of the seams, which would help us to identify exactly where we want to start mining on that project, because we will start at surface and we will work our way down just to be cost effective and to start. And really, the company's always been of the mindset that we want to start scalable and modular. and start to build revenues to be self-funding. And that's where we think we can get to with Wapiti.
Yep. And so in terms of how advanced Wapiti is compared to Fernie, your second project in BC, where is it a bit further along? Did they both come into the portfolio at the same time, or?
Yeah, look, they did. There's been, I think, a bit of switching back and forth in terms of exploration work done on the two. So we have fairly good knowledge on Fernie. We've had 2 bulk samples there already that we've completed. But right now, what we're going through on Fernie is more of an exploration target using Darouge, just to determine what is the best strategic approach for drilling through an exploration permit. So we'll complete that this year with Fernie, which will allow us to apply for an exploration permit and to be really strategically focused where. We've got 61 kilometres of strike length. I'm not going to go and drill all of that out. I want to be really focused on our best return on investment when it comes to drilling Fernie. So it's fundamentally 12 months behind Wapiti, maybe 18, depending on the exploration permit. But, you know, we're pretty well versed now on what needs to be done. And that'll really mimic Wapiti in a way that ultimately that needs to become a fertiliser production location as well, to service Saskatchewan, southern Alberta, those markets where logistics and cost play a huge component to the economics of the projects.
Is that so? Are you allowed to do anything on the ground without the exploration permit, or is that specifically for drilling? Can you go walk the joint at the moment and take samples?
Yep. Exactly. And we'll probably do some of that to keep them in good standing. So we can still go and take grab samples. We can still go and do some shore pack drilling, which is just shallow drilling at the surface without a permit, and get further information. But because there's been so much coal work done in the area, there's so much drill data and so much information that Darouge can draw on to give us a much better picture of what's actually going on our projects and in our tenements. So that's really where we're leaning on Darouge to collate all of that information and to make sure that the money we're spending is strategic and it's going to bring us the best return on investment. Because for 61 kilometres of strike length, there is a lot of areas we could go to, but we sort of have some feelings about where the best deposits are, closest to surface, the quality, etc. So that's what we really want to hone in on and target that in 2027.
See, 61 kilometres, that's a decent amount of tenure, isn't it? Take your pick.
It is. Well, and it probably answers the question that I often get asked: are you sure you're the only sedimentary phosphate holders today? And fundamentally, it is, because we hold a significant part of the seam that runs from the top of the Rockies all the way down. The other aspect of it is that much of the land is national park and it's protected, and that there is no access to anyone for exploration work. So we are in a strong position, being the only sedimentary phosphate holders in Canada of any serious nature.
Yeah, and bringing it up here, I assume the fact that it's listed as a critical mineral for Canada, US, EU and Australia, it definitely helps.
It does. Oh, look, it certainly does. I'd like to see that translate into faster permitting and more funds. But fundamentally, I have to be honest and say that I think the permitting process has improved. I mean, we've had very good relations and work with the group up in Wapiti out of the Prince George office, very professional people and really helping us work through that. And so you are seeing a little bit of a mentality shift when it comes to permitting. Funding, there's somewhere between $3 and $4 billion that we should be able to access in the next 12 to 18 months. We could start on some of it now, but fundamentally, I think having a mineral resource and having a pre-feasibility study completed just makes it far more likely that the government will fund some of these projects that we're working on.
Yeah. I'll ask you to somehow put this into a couple of minutes, this flow sheet concept that you've got, which I assume is not as easy as I make out. So you mentioned that it's usually a very capital intensive approach to mining things like being a phosphorus miner. You've got like 4 stages to approach, generating some coin out of this if you do develop these projects. Take us through it and the different levels of the output of each stage and where the payability is, I guess. Where do you end up making the most?
Yeah, so look, phase one was what the company historically started, which was mine rock phosphate, crush it into a powder, sell it to organic and regenerative farmers. Now, I think everyone got caught up in the organic phase and somewhat the regenerative phase. It just doesn't move enough volume because the concentration of phosphorus in straight rock phosphate that's available to the plants is typically low. So we started that. I joined the company, probably saw that this wasn't going to take a listed company to where it needed to be. Having said that, it pays our salaries, it pays our listings, it pays our insurance. So it's nice to have for an exploration company that's somewhat self-funded. I'm not going to ignore it, and it is continuing to grow, albeit relatively modestly. We think it can grow to $5-10 million, and I'll take 50% gross margin. It's a nice little business to have on the side. However, the focus has to be processing the rock phosphate to concentrate it so that people actually want to buy it. And that's in the form of fertilizer or LFP batteries. Now, that's where we're at today is phase two. A single superphosphate plant, we will crush and mine the rock phosphate, beneficiate it, spray sulfuric acid on it, and turn it into a single superphosphate fertilizer. That's something that the market demands. It's something that farmers use because it's a more concentrated, more valuable product. The reason we've gone down this path is three or fourfold. One, our mines in Canada are well suited to these types of volumes that we can grow into. Most importantly, our access to sulfuric acid gives us a huge competitive advantage. That's why you're seeing the price increases today out of Iran, because of Iran. We're sitting in northern Alberta where we have very cost-effective access to sulfuric acid, to natural gas, some of the cheapest outside of the Middle East, to logistics network in the form of rail from CN and CP, on the edge of the Western Prairies, which is, first world agricultural production, where they import 100% of their needs. So we have all of the inputs, we have the market, we have the demand, we just need to get it out of the ground. Yeah. And given it's sitting at surface and we know where it is, we're very optimistic about this. And the final part to it is, like I mentioned before, it's low capex. We're talking, and this needs to be validated, but somewhere between $50 and $100 million. Now, you might say that's a big range, but the next step up is a phosphoric acid plant for $2.4 billion. We're avoiding that $2.4 billion to making something slightly different, but that could generate up to $50 to $60 million a year just off a small plant doing 100,000 tonnes. Start to get self-funding, expand on that in the Wapiti area, expand on it in Fernie, and we really start to develop significant revenue and profitability. That's phase two. Phase three, I'll be really quick on that because I'm saying too much, but a NovaPhos plant is a thermal process for processing sedimentary phosphate, and it makes very high-grade liquid fertilizer and potentially PPA for battery-grade LFP batteries. That's extremely valuable output, that product. You're talking $2,000 a tonne instead of $500 a tonne. Now, traditionally, you would have said, well, natural gas is expensive. In Alberta today, I was there 3 weeks ago, it was $1.31 a gigajoule. In the US, it's $5 to $6. In Australia, it's $16.
Yeah, wow.
We have a huge competitive advantage on natural gas. NovaPhos, who we have a letter of intent with, are still working through the process. They've had Hatch re-engineering the design, and they're looking to build their first small commercial plant. If that's successful, then that's the third phase that we would accelerate towards, because the demand for liquid fertilizer is huge. And we believe the demand for LFP will be there in North America at some stage. You've got these plants being built in Canada. They're going to need a source of phosphoric acid, purified phosphoric acid. So that's the cherry on the cake, as I put it. It's not what I'm hanging my hat on, because there is risk associated with it being a newer technology. But fundamentally, it's not an overly complicated technology. So we'll focus on single superphosphate while NovaPhos develop that tech, and when it comes to market, we'll be ready to react. The phosphoric acid plant is purely a Utah play, and that's where we're talking $2.5 billion of investment. That is not something Canadian Phosphate will do by itself. We'll look to partner, we'll look for various options, but we'll need a major in the fertiliser space globally to want to come on and take that project on with us.
Is that would the Utah, would that end up being a feed source for Simplot, or what would it be a standalone? Like, how would you view that project?
It's a good question. If I'm a betting man, I'd be more inclined to say it's a standalone, and only because Simplot have decades and decades, from what we understand, they're a private company, so it's not public information, but it appears they have decades, of mine life. So whether or not they would be interested to just take that out because we've developed it and it's ready to go, I don't know. But I think globally speaking, the number of companies that would like to have a foothold in the North American market and hold an asset there is significant. And in addition to that, you've got the USDA talking about $1 billion funding project for new fertilizer plants. They feel that there's a duopoly between Mosaic and Nutrien, and they'd like to see new players coming into the market. So I think there's a few different angles. I'm not going to speculate too much, Matt.
Yeah.
But it could go either way.
Yeah, and with Canada, because I think it's LG and Stellantis, they've already built an LFP mega factory, and then you've got Volkswagen also building one that's due in about a year or so. Where would they've got to obviously import all their phosphorus acid for that battery train?
Look, my assumption, without knowing their business intimately, but given that nearly all the phosphoric acid for LFP batteries is coming out of China, they would be ordering it out of China. Yeah. My personal view is that that's not a long-term strategy, given the export restrictions that they continue to place on phosphoric acid out of the country. So to me, they're going to be looking for a domestic source, one, in my view, that they can fully control, not buying from third parties who are traditionally fertilizer companies. That's also a risk, because those fertilizer companies have invested billions of dollars to make fertilizer. Whether or not they want to pivot and supply some of that product into LFP batteries, I'm not sure, but I don't believe that that's how the OEM, the car manufacturers, would look at it.
And so who are you going to be talking? I know that it sounds like you're going to be talking to different people in America and in US and Canada, but are you going to be who's going to be the off-takers? If you're going to get this going and you're looking for strategic partners or mobs to take strategic stakes, selling some future off-take, who are you chatting to? It's a bit different to everyone chatting to Glencore and Trafigura and all this. We're in a different world, in the world of mining agriculture.
No, look, I think the most obvious companies that we would talk to and we are talking to is fertilizer retailers. Someone that can sign an offtake and say, okay, we're going to take this product to market, we're going to own it, and we're going to put the money behind it to support that development. Because if you look at it today, a fertilizer retailer in Canada is either buying it out of the US or buying it out of Morocco, whether it's 3 months, 6 months, or 9 months in advance. And let's say you look at the market today, they're selling it for $1,400 a tonne. They're typically making up to $100 a tonne. If you're having to purchase it 3, 6, or even 9 months in advance without knowing what the pricing is going to be 6 months from now, they can effectively lose their entire profitability in one season and even go backwards, depending on what happens with global pricing and also currency, because everything's traded in USD. So having a domestic source produced in Canada in Canadian dollars really de-risks their business. So a fertilizer retailer is a primary focus, but it's definitely not our only focus. There's other companies there in the trading space, and anyone that's involved in sulfur, anyone that's involved in agriculture, can see value in this without a doubt. And we're having those discussions with various companies. But a fertilizer retailer, they're your primary target.
Yeah, yeah. And so from what you've said, it looks like there's a possibility you could take this to phase 2 and, get it funded without a big, massive overhang. But beyond to get to phase 3, you're really talking that's projects like stake sale or someone else bigger would have to take you out to do it? Like, I guess, what's your intentions? I know we're talking many years out from here, but is trying to execute phase 2 by yourself, I guess, a goal?
Oh, look, I don't see us executing phase 2 by ourselves. I think there's a strategic partner involved in that. And it's not just from a funding perspective. Like I said, that may very well be a fertiliser retailer who wants to invest into the project as well as have offtake. I think there's a number of parties that would want to be involved at phase 2. And I think that people that can bring that, particularly that commercial aspect to the table, let us focus on mining, let us focus on getting it out and getting it processed. I don't really want to be involved in the commercialisation of the product into the market. There's so much infrastructure and people and shops and rail developed around that. I think that's where a key partner comes into play. So it's not as critical, I would say, for us. Phase 3 would be more critical to have a significant cornerstone partner into the project. But again, I think the economics of phase 3 are going to be even more enticing than phase 2. So I think raising capital when we finally present a feasibility study on phase 3, provided it gets to market, I think it's going to be extremely attractive as well to investors.
Yeah. So I guess next 12 months or so, what's to be expected? I saw you just put out a renounceable rights issue, and you're going to be obviously drilling and aiming for MRE updates. Like, is there any sort of further studies, or like sort of what are the big things that we might be seeing?
Yeah, look, we've been planning for the exploration target to be completed in Fernie to support the exploration permit. We expect to come out with a maiden resource, I shouldn't say maiden because technically we had a JORC back in the day, but a mineral resource estimate for Wapiti at the end of this year. We're also targeting Utah to bring that into a JORC compliant mineral resource estimate. And that, again, will be dependent on exploration permits. But traditionally speaking, it's a very fast process in Utah. It's been communicated to us that it's a 6 to 8 week process, which will make me extremely happy if that's reality. And that would also help to give us a JORC mineral resource estimate towards the end of this year as well. That then allows us to start our pre-feasibility work for both Wapiti, and we'll determine how we approach that from a pre-feasibility study for Utah as well.
Yeah, so this Prezzo had you at about a bit over 2 mil cash, but I think the renounceable rights issue, that's bringing in about bit over 4 mil. Is that right?
That'll bring in 4.5 after fees and everything are taken out. So that gives us, 6.5 effectively, where I think we're at about 2 now. And I think the thing to say there is we raised that $2 million back in November that you see there. We've barely touched it because our current sales to organic and regenerative farmers has been paying the bills now. Clearly that won't get us through this year as we start to drill, but we'll look to drill out Wapiti for somewhere between 2 to 2.5 million Canadian dollars. And to get the JORC compliant mineral resource estimate for Utah, we're expecting it to be around 350,000 USD, so close to 500,000 Aussie, I think, based on the exchange rate now. So you're looking at between 2.5 to 3 million Aussie dollars being spent on both of those drill projects this year.
Yeah, and those sales to the farmers and everything, like as you said, it sort of covers a lot of the overheads. Like, is there what licensing and stuff do you need to do that, or is it not much to
No,
it?
it's actually a good point you raised. So we've also got a mine at 10,000 bulk sample permit out of our barns, out of our Fernie site. So we did get a bulk sample permit approved.
Oh, okay,
We've got 10,000 tonnes to come out of Canada. And there's two things that'll do. Most of our sales are in Canada, but unfortunately we're having to sell out of our stockpiles in the US. So there's a lot of logistic cost to that. So we've had to sort of help the customer out a bit. So it's not as profitable. When we have this 10,000 tonnes on the ground in Canada, you're probably looking at 2.2 to 2.4 million in revenue at least 50% gross margin. But there's a lot of customers up there that aren't prepared to buy out of the US from us today because the freight is worth more than the product.
Yeah,
so
right.
we've actually got the product sitting in the market in Canada. I think that will really help to accelerate the adoption up there. because the demand is there, but you're looking, like I said, the cost of freight's just as much as the product. So that'll help to build sales even further.
Yeah, so it's just like a DSO, is it? Just it's crushed and sent.
Exactly. Direct run of mine. We will crush it to a 30 mesh. Talking US terminology here, sorry. So it's 30 mesh, which then the growers can either apply it directly to the fields, or our target's been more manufacturers who value add it. So they'll add some sulfur, they'll add composted manure, they'll add a bit of potash, they'll make up their own special blends. And they're also the easiest to work with because they're taking volume, and they're the ones then commercialising it out in the market.
Yeah, nice. Oh, well, it covers the cost of any future interviews, mate. So, no, Gleeson, thanks, mate, for that, mate. That was, mate, I love making unsexy things sexy. And phosphorus...
mate, you do a very, very good job of it, I must say. You do a very good job of it.
Oh, mate, yeah, no, that was it. I learned a bloody shitload about that. So, mate, after all the years you've probably been peddling this around, good to see you. Good to see you, the popular kid at school now.
Oh, I tell you what, I was the kid sitting on the chair, never getting asked to dance there for a while.
That's all right. They're usually the ones I'll go for, mate. So, good stuff, mate. Best bloody very interesting, very interesting. It's amazing how a bit of a global supply chain disruption can really make people think. Exactly. The status quo isn't as so.
Rock phosphate by itself is useless. If you don't have sulfuric acid and natural gas in an agricultural market, it's really challenging economically speaking. We've got everything at our disposal. So we've had a little bit of luck finally. I've built a strategy that was predicated on those inputs, and then Iran highlighted the importance of sulfuric acid. So it's you've got to have a little bit of luck once in a while, don't you?
Yeah, very much so. All good, mate. Right, good to meet you, mate, and I'll see you in the flesh one day.
Yeah, sounds good. Thanks.